Monad have just proposed Monad 9, a network upgrade targeting mainnet deployment in the first half of February. For context, Monad launched mainnet back in November after raising $240 million. It's an EVM-compatible Layer 1 promising 10,000 TPS through parallel execution. So what is Monad 9? 3 core improvements. MIP3 or MIP3 introduces linear memory pricing instead of quadratic, meaning cheaper and more predictable transaction costs. MIP4 or MIP4 adds reserve balance introspection, letting smart contracts check for rule violations in real time. And MIP5 or MIP5 activates Ethereum's Fusaka EIPs, keeping Monad aligned with Ethereum's latest upgrades. The ecosystem is already heating up. Kitsu's Supermon vaults just crossed 100 million in TVL, offering over 14% APY. That's correlated with a 22% weekly price gain for Monad. So why does this matter? Well, Monad is positioning itself as the high-performance EVM alternative. While Ethereum Layer 2s fight over the same users, Monad offers a fresh Layer 1 with parallel execution that actually works. The timing of the upgrade is strategic. February deployment means they're iterating fast, whilst attention is still high from their November launch. Most new chains slow down after mainnet. Monad is actually accelerating. The tokenomics are also favourable. The team and investor tokens don't start unlocking until Q4 2026, meaning no major sell pressure in the coming months, when compared to other recent launches with projects that are currently drowning in unlock schedules. If Monad 9 executes smoothly, expect developer migration from congested chains. The 100 million TVL in Kitsu vaults shows capital is already flowing. Watch for DeFi protocols announcing Monad deployments as the upgrade goes live. Next up, we have the Pudgy Penguins expansion. Pudgy Penguin is stacking catalysts. The SEC is reviewing the Canary Pengu ETF with a decision expected on March the 11th. This would be the first US ETF to hold both a meme coin and NFTs in its structure. But that's not all. The team announced a partnership with DreamWorks Animation to integrate their Pengu character into the Kung Fu Panda universe. We're talking themed digital assets, merchandise, and potential animated content. This follows their Manchester City deal that launched on January the 17th with premium collectibles targeting the club's 300 million plus global fanbase. On the gaming side, Pudgy Party just crossed 1 million players, and they deployed Pengu Clash on Ton, tapping into Telegram's 1 billion user base. The team also deposited 397 million Pengu tokens into Binance to boost liquidity and trading activity. So why does this matter? Well, I think the numbers speak for themselves. Pudgy Penguins is doing something most crypto projects can't figure out: building a real consumer brand. They're not relying on speculation. They have physical toys in Walmart and Amazon. They have a mobile game with 1 million players. Now they have Hollywood and Premier League partnerships. The ETF decision in March is the wild card. If approved, it validates meme coins and NFTs as institutional asset classes. That's a narrative shift that could lift the entire sector. The risk to this? Well, Pengu is down nearly 60% from all-time highs. Daily protocol fees are minimal. The token economics rely heavily on brand momentum translating to actual demand. The DreamWorks and Manchester City deals show mainstream ambition. Whether that converts to sustainable token value depends on execution through Q1 and wider macroeconomic factors. Watch the ETF decision and retail merchandise numbers closely though as key indicators. Next we have Plume Network. Plume Network just had a massive token unlock on January the 21st, releasing 1.37 billion Plume tokens. That's 14% of the total supply, worth about $23 million. For those that aren't aware, Plume is the first full stack Layer 1 built specifically for RWA finance, real world assets. Over 200 projects are now building on the network right now. The institutional traction is serious too. Wisdom Tree launched 14 tokenized funds on Plume. Apollo deployed a $50 million credit strategy. Invesco moved a $6.3 billion senior loan strategy on chain. Plume now has more RWA holders than the top 5 chains combined. Over 210,000 wallets hold tokenized real-world assets on the network, doubling in just 30 days. So why does this matter? RWA is the sector where crypto meets traditional finance. We're talking trillions in addressable market, and Plume is positioning itself as the infrastructure layer. When Apollo, Wisdom Tree and Invesco deploy real capital on your chain, then people should be taking note. The token unlock could have tanked the price too, as we've seen many a time, but the foundation previously delayed unlock specifically to stabilize price and encourage long-term participation. The risk, of course, here is competition. Ethereum and other chains want the RWA narrative too. Plume's advantage is being purpose-built for compliance and tokenization workflows. If RWA continues growing at current rates, Plume captures the infrastructure premium. Next up, we have Sonic. Sonic SVM just revamped their tokenomics with a buy and lock model. Sonic is the first SVM chain extension on Solana, focused on gaming. They've signed contracts with over 10 game studios, including Rage Effect and DeFi Land. Their TikTok integration, called Sonic X, onboarded over 2 million users. So what's changed exactly? Well, previously 50% of transaction fees were burned. Now those fees buy Sonic tokens from the open market and lock them in a smart vault for 24 months. But there's more. Another 12.5% of fees in Sol get staked on Solana mainnet. Those staking rewards pair with vested Sonic tokens to create liquidity pools. The Sonic token price surged almost 15% on the 2nd of January, outperforming other gaming tokens like Immutable and Polygon in the Layer 2 category. So why does this matter? Well, crypto has been an absolute graveyard of failed promises. Play to earn has pretty much completely collapsed. Most gaming tokens are down 95% plus. So why is Sonic any different? Well, first, the tokenomics actually makes sense. Instead of burning tokens and hoping for deflation, they're creating sustained buy pressure where every transaction triggers market purchases and the flywheel starts to come into effect. Staking Sol and using those rewards for liquidity means Sonic benefits when Solana does well. The ecosystems are aligned on incentives. Third, 2 million users through TikTok integration means they're reaching people who don't know what a blockchain is. And the reality is that is how you get real adoption. And the final news story of the day is on Story Protocol. Story Protocol has a major unlock coming on the 13th of February. 50 million foundation tokens plus 6 million investor tokens hit circulation, and that will be the biggest unlock since launch. For those that aren't aware, Story is a layer 1 blockchain built specifically for intellectual property. The pitch is tokenizing the $61 trillion IP market. Creators can register, license and monetize their intellectual property on chain. Story also has significant backing: A16Z, Polychain Capital and Samsung Ventures. Total raised was $136 million. They also announced a partnership with Sol Exchange to tokenize $450 billion in K-pop and entertainment IP assets by 2026. The foundation also launched an $82 million buyback program to offset unlock pressure. So why does this matter? Here's the bull case for Story. AI is creating an explosion of content. Who owns that content, and how do you license training data? These quite literally are trillion-dollar questions without any solid answers. Story's graph-based architecture is built specifically for complex IP relationships. Standard blockchains can't model recursive licensing structures, but Story can. The Korea partnership is absolutely huge. K-pop is already a global phenomenon, and fans spend heavily on collectibles and merchandise. If even 1% of that market moves on chain, that's $4.5 billion in tokenized value. The bear case, Story token is down 79% from its all-time highs. Daily protocol fees are small, around $15 to $45, and valuation completely disconnected from current utility. The unlock adds sell pressure at a weak moment, and investors should be monitoring whether buyback programs absorb supply and whether Korean RWA onboarding accelerates. These metrics will determine if Story is building a real business or just trading on narrative.